Good morning. Welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to go through our live rates for some different programs, and then we are going to be talking about non-warrantable condos. That is our deep dive topic here for today. So we'll get into that shortly. Great topic to go over. Give us just a moment to go live on all the different platforms. Hope everybody's been having a great day so far. Go ahead and drop a comment there in the chat as you tune in. We got the chat up on the screen there. All right. It looks like we're live on all the platforms, so we'll go ahead and get it started here. We'll take the chat off the screen for now. We'll go ahead and keep dropping comments there as you tune in. Drop any questions you have as well. And then we'll make sure to get to them. All right, so welcome everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every morning at 11 a.m. Eastern on this show is go through our actual live mortgage rates for some different programs. Then we do a deep dive into a different loan topic. And today's topic is going to be non-warrantable condos. So Jose has dealt with this quite a bit, and he'll go ahead and break it down for us here later. But before we do that, let's go over the live rates. So Nick, if you're ready, let's check out what the rates are looking like this morning.
All right, not much change yet this morning, but we should have some news today to ponder over. We will look at the live rates for today. It is June 11th, just after 11 a.m. So all of our standard programs have their initial rates. As the Fed announces some news today, we might have some changes. Now, this sheet that we're going to show will show all the different programs based on the same scenario. So we're going to set up a standard single family home, 500,000 purchase, 400,000 loan amount. That corresponds to 80% loan to value, 20% down payment. And we'll set all the demos here to a 760 estimated FICO credit score and an estimated 40% debt to income ratio. So those are the basic settings, and we'll compare the APR across the programs. When we get to the DSCR options, we will use a value of 1.5, which I'll explain when we get there. So this will show us the general APR for all the programs today. If you'd like a full breakdown of itemized loan estimate, please meet up with one of our loan officers. They'd be happy to help you out. We have over 300 loan officers that can send the full loan estimate. Let me go ahead and share my screen and check out the live rates. Make it big. All right. So again, these are our estimates based on our general assumptions. And the first option we typically look at for most customers, especially for a primary home, is a standard conventional option for a primary home 30-year fixed. So rates today come in at 6.625, final APR 6.967, so still under 7, which is amazing. A couple months ago, we were well over 7. Hopefully we see this go down if we get some good news here today. Now, if for any reason our customer doesn't qualify for a conventional option, we typically want to quote an FHA option. FHA allows more leniency on credit issues as well as a higher debt to income ratio, but it does have required mortgage insurance. Rates today come in at 5.875, final APR with all of the fees and mortgage insurance, 6.853. So notice it's a touch cheaper than conventional if our customer qualifies for both in this case, so definitely take a look at it. If you don't mind the mortgage insurance, and our customers that need to use it, definitely a good option because it is very comparable to conventional. Moving on to our other options, our VA option. It's only for our eligible veterans and active service members. If you are, the VA programs are amazing. Rates today as low as 6%. Final APR at 6.312. Notice that APR is much better than FHA or conventional. So definitely an amazing program for our vets that qualify. Definitely recommend them to take advantage. And moving on to our final agency government option, USDA. Remember, USDA is only eligible for properties in USDA areas, typically all the rural areas of the country. So if your customer is shopping in those areas, definitely a great option. Today rates come in at 5.99 and final APR 6.735 with all of the fees included. So typically our customers that are shopping in this area might compare it to an FHA program. So notice the USDA is a little bit cheaper, and they'll also maybe compare it to a conventional option. And again, USDA is a touch cheaper. So definitely in those areas of the country that allow, and our customers that qualify, USDA is a great option. Now moving on for our alternative options. So the first 4 options are the options that any other bank or lender will have, but many other banks and lenders will have to deny our customer if they don't qualify for a standard conventional or government option. That's where we love to present our 5,000 plus additional programs. starting here with our non-QM alt doc for a primary home. So alt doc is what we may use for bank statements or 1099s. We did an episode on the other day, or P&L programs, all kinds of different ways we can document alternative documentation. If our customer doesn't qualify for a conventional loan, we may need to use these alt docs. So to use alternative docs, this option is probably a bank statement or similar. 7.125 is the lowest rate option. Final APR 7.447. So notice we're within a half a point of conventional. So if our customer, for any reason, doesn't qualify for some reason, we can use alt docs and get them qualified for relatively the same cost here, not much more expensive. So amazing option for our customers that need it. Now moving on to our investors, lots of options for investors. First up, our non-QM option. Again, alt docs such as a bank statement option, rates as low as 7.5%. Final APR 7.833. And we'll compare that to our other investment options. Remember, there are no government options for investments, only conventional agency options. So no USDA, FHA, or VA, but we do have conventional, 30-year fixed conventional for an investment. Today, coming in at 7.5 rate. Final APR 7.855. So very comparable to bank statement if our customers need to use it. Definitely be open to those options. Buyers that are looking for investment properties, check out our favorite programs. The DSCR stands for debt service coverage ratio. No income or employment is used. We simply use the estimated rents from the appraisal to determine a DSCR value. DSCR stands for debt service coverage ratio. If the estimated rents can cover the debts, that's a ratio of 1 or higher, aka the property cash flows monthly. For these demos, we use a value of 1.5 so we can see all the programs that pop up. First demo here is our DSCR with a 3-year prepayment penalty, pretty standard. Rates come in at 7.25, final APR 7.6. Notice this is beating conventional, which is absolutely amazing. I'd say 100% of our investors would take advantage of a DSCR program, even at a higher cost, but today it's beating, which is amazing. And we can sweeten the deal even more with a 5-year prepay. We have some options that allow a 5-year prepayment penalty to lower the rate even more. Rates as low as 7%. Final APR 7.316 with this option, which again beats conventional by a whole lot, which is amazing. And moving down, we do have an option with no prepayment penalty for investors that don't want a prepayment penalty. That's fine. Rates as low as 7.875. Final APR 8.231. So notice that's a touch higher than conventional. Still, most investors would prefer a DSCR option. No income, no employment documentation needed. And there are various prepays. Definitely recommend, if they are open to it, to use a 3 or 5-year option to sweeten the deal there. And the final 2 demos we have here are second mortgages. So non-QM second mortgages, very popular request these days because many customers don't want to touch their low rate first mortgage. So first option here is a second mortgage to get cash out of a primary and not touch the first mortgage and not have to use a HELOC, which is typically at higher rates. So our 30-year fixed second mortgage comes in at 8.875, final APR 9.099, which is typically going to be better than a HELOC option. And the final option we show here are 30-year fixed second mortgage for an investment property. So to get cash out of an investment property without refinancing the whole mortgage, you can do this option, 10.625 rate, final APR 11.154. So good options for our customers that don't want to touch that first mortgage. Let me go ahead and switch screens and get into today's topic, which is something that we can't do live on the show. You know, we do all these demos based on a standard single family home, so we have something to compare. And even doing condos is not the same as a non-warrantable condo, which is our topic for today, a very specific subset of condos. So Jose will explain what we're talking about here. It also means somewhat different things in different states too, right? So just make sure that you're on the right track there. Florida is treated very differently than any other state. But these are options for our loans that would otherwise not qualify for standard programs. So these are going to be typically non-QM options that allow us to do what we would otherwise not be able to do. So Jose, let's check out these solutions for what would otherwise be an impossible deal.
Absolutely. Now we're talking about condotels here, right? Where specifically, well, non-warrantable, but condotels tends to be the number one non-warrantable. So in my search that I did today, I went with the more restrictive subset of condotels, right? Because the condotel financing is a condotel is a non-warrantable condo, basically, because it has a hotel component, which usually means that it has a high percentage of tenants versus owners. And there may be some additional restrictions when it's a condotel. They may have rental restrictions regarding who can actually manage the property, because condotels are short-term rentals. And they may also have some restrictions regarding owner occupancy. They may actually limit the amount of time that an owner may live in the property. In some cases, it's 6 months. In other cases, it's 30 days as a maximum continuous time frame that an owner can occupy the property. Now, what are some of the other more usual components that make a condo non-warrantable? Well, no reserves or reserves below the 10% Fannie Mae requirement. I already mentioned high percentage of tenants to primary rent and second home occupants. Litigation could be another component. More than one investor owns a certain percentage of the units, right? Investor concentration. So those are the main. Or another one now. This is splitting hairs now, but this is really important, especially in Florida. The insurance deductible on the HOA master policies. There are limits, right? They don't let you go at 10% deductible. But with the condotels, they have workarounds where they look into items like, does the HOA have any money to cover that actual 10% deductible, as opposed to just strictly disqualifying the property simply because you could not check a box. Because that's Fannie Mae, Freddie Mac, the more agency, very rigid requirements, cut and dry, black and white. Non-QM, again, as you know, we have a variety of guidelines. So not all condotel guidelines are going to be the same either. So you do have to read the minutia and see what's actually going on, and make sure that you dot all your I's and cross all your T's regarding the specific details of your loan. Now, if this was, for example, a conforming loan where the only thing we were worrying about was the reserves and the budgetary issues, then we could do a limited review condo loan. That's a conventional loan only, where then you could go in with less LTV, at a lower LTV, and not have to provide a budget. In the rest of the United States, other than Florida, limited review is at a 90% LTV for a primary residence. And that's LTV, not CLTV. And for investment properties, we're looking at 70. So 75 in 90 in the rest of the US, 75 in Florida for the primary limited, and then 70% for the investment property across the board for limited review. What we're talking about now is a whole different ballgame, right? We're going to resolve the budgetary issues, but we're also going to resolve all of these other issues. And on top of that, like you're going to see in the presentation, we're also going to add a whole lot of different income types, right? We're going to do full doc, 1099, DSCR, bank statement, and P&L, to name a few. So let's get right into it. So our first option here, again, full doc, non-QM, 85% is the maximum LTV for this condotel option. And again, on all non-QM loans, never any mortgage insurance. So at 85%, no MI, rate's just going to be a little bit higher, and the rate does take into consideration the higher risk for no MI, hence a little bit higher rate. So for our primary, now again, primary condotel, you gotta watch out with the building, right? But that's more of a concern of the realtor and the borrower, making sure that if there's going to be a primary option, that they don't buy in a building where you're not going to be able to live there for the full year. So our first option here is 9.5% is our lowest cost option at a cost of half a point. at a cost of half a point, and 8, and you can buy that down all the way to 8.375 at a cost of 2.375 points. So again, primary option, full doc, 85% LTV. So now our primary option using bank statements, right? Now here's where we're adding our twists and turns to the equation. So previously our lowest rate option was 8.375, 2.375. Now we're at 8.625, costing 2.5 points as our lowest rate option, and our lowest cost option, 9.625 for our bank statement, and still 85% for a condo hotel. Not too shabby. And our profit and loss. Now, profit and loss is a little bit of a riskier product. So the LTV, the maximum LTV, does drop to 80%, because on the bank statements, you're looking at deposits coming in. P&L is just a P&L report. And in some of the options we have, you don't even have to provide any bank statements to support it. Now, if it's a purchase, you may have to provide the last 2 months, depending on seasoning requirements. That's just for asset verification, but not for income verification. So P&L, a little bit higher risk, so lower LTV, but the rate is pretty good. 9.125 is our lowest cost option. 0.875 is the cost on that. And our lowest rate option, 8.25% at a cost of 2.375 points for our primary P&L at an 80% purchase. So now let's go with some investment property options. Now our maximum LTV for our investment property option for condo hotels is 80%. And here is our bank statement option. So this is really a mind blower, right? Using bank statements for a condo hotel, 80% LTV. And you are looking at 9.875, our lowest cost option, almost at par. And you can buy that down all the way to 8% at a cost of 3.5 points. And that's our bank statement purchase option. Now our condo hotel 1099 investment option. 1099s is great, for example, for our realtors that are paid with 1099s. No need to go with bank statement option if they get 1099s, and you can use 90% of the amount reported on the 1099 as their income. So that is a win-win situation there. So our 1099 option, 10% is our lowest cost option, almost at par, and you can buy that down all the way to 8.125% at a cost of 3.375 points. And now our flagship DSCR. So let me look at something here a minute, right? Bank statement 8.25, 8.125, 3.375. DSCR 8.125, 3.4. So basically the same cost at our lowest rate option. And this is with a 3-year prepay. I'm about to show you the 5-year prepay option, because remember, the ones I was showing you here with bank statement 1099, actually is this one 1099 bank statement, are 5-year prepays. So first I show you the 3-year prepay, and our lowest cost option actually has a lender credit of 0.28 at a 9.375% rate. And it's 8.125 lowest rate option at 3.4. And again, this is with a 3-year prepay. Now, with the 5-year prepay, look at that. We're actually beating 1099 and bank statement options here, right? So we got 9% with a lender credit. Wow. And you can buy that down all the way to 7.875. And look at all the multitude of rate options. So we love giving you options at the mortgage calculator, depending on how much money you want to have in closing costs, how long you plan to keep that property, keep that loan, are all going to be factors you're going to consider. And obviously the money available for the transaction are all factors for if you're going to go with 7.875 or 9%, for example. But there are options. So 3.275, amazing at 7.875 rate. And now our last two options are going to be a couple of refi options. So you saw all the different purchase options for the different income streams. I'm not going to show you all of those for refis, but I want to show you the main one. So primary bank statement cash out refi is max 80% LTV. You're looking at 9.5% is our lowest cost option at 0.875, and you can buy that down all the way to 8.5% rate at a cost of 2.5. This is primary bank statement cash out refi. And then, of course, for the investment option, I'm going to give you our DSCR option. 75% LTV is the max LTV that we have for this DSCR cash out of a condo hotel. And this is with a 6-month seasoning requirement. And we're looking at 5-year prepay. And look at those rates. 8.875 is offering a lender credit of 0.08 points. And you can buy that down all the way to 7.75% at a cost of 3.4 points. So many solutions here for your non-warrantable condos, especially your condo hotels, which are the most restrictive of the non-warrantable condo varieties. Because you can have a condo that doesn't have reserves, that's full doc, and you can do that with a HELOC combo if the borrower qualifies and is closing in a personal name. But if it's anything other than that cookie cutter type of scenario, all these options are the way to go.
All right. Thank you, Jose. I do not see any questions. Surprisingly, I don't see any questions here. So I guess we'll go ahead and wrap it up then. Great topic here for today. We all need to be aware of. Go ahead and make sure to tune in tomorrow. We do this at 11 a.m. Eastern every weekday, where we go through the live rates and do a deep dive into a different topic. So we appreciate everybody tuning in. We'll see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the